Good morning, everyone. This is Marshall Gittler bringing you the morning comment for July 25th. It's hard to know what to make of yesterday's data. On the one hand, the Bundesbank was telling us recently that growth was slowing in Germany. But on the other hand, yesterday's July PMIs for Europe, particularly Germany, exceeded expectations. There's a similar mixed picture in the US. On the one hand, jobless claims in the week of July 19th plummeted to the lowest level since 2006. But new home sales for May saw a record downward revision, and then June sales plummeted further. The data clouded the picture more than clarified it. The market's conclusion, though, seems to have been to take it all positively. Bund and Treasury 10-year yields both rose, as did Fed funds expectations. The higher U.S. rate expectations supported the dollar, which was unchanged to higher against all the G10 currencies, except for the Swedish krona. The rise in the krona was, frankly speaking, inexplicable, as it follows the higher-than-expected unemployment and the fall in producer prices for June that were announced yesterday. Now, elsewhere, Japan's inflation seems to be cooling. The national CPI for June slowed to 3.6% year-on-year from 3.7% in the previous month, while the Tokyo CPI for July also eased. Now, the Bank of Japan's base scenario is that inflation will pick up towards the end of the year. But if it doesn't happen, as seems likely to me, they may have to take further easing steps. I think the yen's likely to weaken further as more and more investors anticipate such a move. There are several major indicators out today. The German IFO Current Assessment Index and Expectations Index are both expected to decline, which could weaken the euro. The IFO index is in contrast to Thursday's positive PMI figures, maybe because it incorporates more recent data on the impact that sanctions on Russia are likely to have on the German economy. In the UK, the nation's preliminary GDP for the second quarter is estimated to have remained unchanged in pace at 0.8% quarter-on-quarter. This will drive the year-on-year rate up slightly. Such strong growth could be a reason for the pound to regain momentum following Thursday's weak retail sales data. From the US, we've got durable goods orders for June. They're expected to rise 0.5% month-on-month. That's a turnaround from the fall of the previous month. The figure is positive, and the dollar could strengthen if it comes in as anticipated. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, Head of Global FX Strategy at IronFX Global, wishing you solid trading.